Well, it was consistent. It was to an extent predictable. She essentially echoed the view on the economy, on inflation, on the labour market as her predecessor. So to that extent, there were no shocks, there were no surprises. And in particular, her comment on interest rates, i.e. that they wouldn't be raised necessarily if inflation hit, if unemployment hit 6.5%, inflation exceeded 2%. That led the market to focus a lot more on her qualitative comments and her data-dependent outlook on the US economy. And to the extent we are still seeing reasonably soft growth there, to the extent we're still seeing some reasonably soft numbers in the employment market, there was the view that rates would not rise anytime soon. And I think the market took that positively. Well, it's true that India's risk markets in general, the currency and the equity markets, have been range-bound for a period of time now. Obviously, we had that very marked sell-off back in May, June, July of last year. But since then, there has been some consolidation alongside, I should say, with some improvement in the underlying fundamentals, not least the narrowing in the current account deficit there. So, yes, it's the case that the currency has been range-bound. My sense is, though, that the currency is still probably a little rich relative to previous valuation levels. I do think that pressure is likely to remain on the currency, not least from a lack of inflows. And so to that extent, I would be a little bit cautious about going long at these sorts of levels, given our expectation of volatility in inflows to EM in general, India in particular, over the coming quarters. It will play a part. Obviously, there is the risk of a policy change after the elections that may or may not have a beneficial impact on the economy as perceived by the market. So I don't think we can discount it necessarily. The rating agencies, for example, are holding off on their downgrade decision until after the election, until after they've had an opportunity to review the policy initiative of the new government. So it clearly has an effect. But away from the election, clearly the impact remains the capital flow story. If we were to see, in likely event, we were to see a sudden reversal in flows and we got to see a lot more risk-taking in the market and a re-acceleration of inflows into EM and India, then obviously that will have a beneficial effect. I don't think that's going to happen. I think flows will remain under pressure. They will remain volatile, and to that extent I can't see any particular reason why we should see some meaningful appreciation over the next couple of quarters, over the next year in IDR, until we've seen a material and meaningful adjustment in some of these external imbalances.